Throughout your investing journey, there are three different ways that your dividend income can increase. The first is simply contributing more capital, the second is reinvesting your dividends, and the third is actually the most simple of them all, but it can actually be the most effective of them all long term, and that is simply buying stocks that increase their dividend payouts over time. If a company is able to grow their free cash flow and earnings year over year, this allows them to increase their dividend payments to shareholders every single year, which can really kickstart the snowball effect. So in this video, we'll be looking at 4 different dividend stocks that just had dividend increases that you need to know about, and we'll also be using my stock valuation spreadsheet to analyze these stocks, which you can download on my Patreon page at the link in the description. Our first stock that just increased their dividend payouts is Nike, and they increased their dividend payout by around 8.8% to around 37 cents per share, and we can see that gives them a forward-looking yield of 1.4%. And if we jump back over to Seeking Alpha on this tab here, we can see the company is currently trading around $115.41 per share. Now, over the past year, they're up around 4%, and year to date, actually down around 2.81%. We can see 52-week low of around $88 per share and 52-week high of $131 per share. Let's go ahead and dig into the dividend history for this company. We can see they've had 11 consecutive years of dividend increases and a pretty good history of dividend growth. 10 years ago, they were paying out around 11 cents per share quarterly, and jump forward to now, they are now sitting at 37 cents per share every single quarter. So it is more than tripled over that time period. So really nice dividend growth over the past decade. If we look at those dividend growth rates, we can see the 3 and the 5-year dividend growth rates sitting at around 11% and the 10-year dividend growth rate sitting at 12.32%. So it does reaffirm what we just saw, a really solid history of dividend growth over the past decade. Now, all of this means nothing if they don't have good dividend safety. And my favorite payout ratio to look at is the cash flow payout ratio, because it tells us how much free cash flow is being used to pay out dividends. And right now for Nike, this is sitting at around 34.77%. Overall, that's a pretty healthy range. It still leaves around 65% of their free cash flow to do things like pay down debt or reinvest back into the business or buy back shares. Now let's go ahead and jump over to my stock valuation spreadsheet. Again, like always, you can download this on my Patreon page, but we'll go ahead and come up here and plug in the stock ticker NKE and hit enter, and you can see all of this data will automatically load in. And let's go and have a target price of around $120 per share, so pretty close to that current trading price, and a beta of 1.07, so you will see a little bit more volatility than that of the market. And in today's video, we're just going to be focusing on the dividend discount model, since we're looking at companies that just increased their dividend payouts. So the idea behind the dividend discount models, we should be able to value a company based on how much they pay out in dividends and how much those dividend payments are increasing. So you can see I plugged in the historical quarterly dividend payouts over the past 2 years, so we can see those yearly dividends and the yearly dividend growth rates over the past 2 years. So overall, again, really solid. We have 12.2%, almost 11%, 11.5%, and the most recent dividend increase, 8.82%. Moving forward, if we project a dividend growth rate of around 7%, we can see with the discount rate of 8.5%, we come to a dividend discount model price per share of $105.57, a little below that current trading price. The next stock that just increased their dividend payouts is CVS Health, and they saw a very nice dividend increase of almost 10%, 9.9%, and this bumped up their quarterly dividend payouts to 66.5 cents per share, now giving them a forward yield of 3.79%. So if we jump over here to Seeking Alpha, we can see this stock has declined by a large amount over the past year, down around 30.32%, and year to date down 23.5%. Their 52-week low sitting at around $64 a share and 52-week high around $104 a share. Let's go ahead and look at the dividend history for this company. Now, one of the things you'll notice as we look at this dividend history, overall, they have seen good dividend growth going from 23 cents per share all the way up to around 61 and now 66.5 cents per share. But you can see there was quite some time where the dividend payouts flatlined from around 2017 all the way through 2021. So typically when we look at dividend stocks, we want to see a steady history of increasing dividends every single year, but that's not the case for CVS. And if we look at these dividend growth rates, I'll scroll down. We can see the 3 and the 5-year dividend growth rates. They're decent. We have 6.5%, 5-year a little bit lower at around 3.9%, but the 10-year dividend growth rate overall pretty solid, sitting at around 10.4%. If we jump over to the dividend safety tab, I'll go ahead and scroll down again. Look at this cash flow payout ratio sitting at 26.35%. That's actually a very healthy cash flow payout ratio. I'm pretty excited to see it in this range. Now, one of the things I do want to look at as well is I want to jump over to the financial statement and look at the balance sheet, because a lot of the times companies like CVS and Walgreens are saddled with debt. But if you look at CVS, we can see here cash and cash equivalents has taken a big jump up over the past few years. Again, that is a good sign. Meanwhile, Well, if we scroll all the way down and look at total debt, we can see here total debt has actually been decreasing since 2019, which is another good sign for the company. Now let's go ahead and jump over to my stock valuation spreadsheet. You can see we already have the dividend discount model pulled up. I plugged in those quarterly dividend payouts and we can see our growth rates here. Moving forward, I'm projecting a dividend growth rate of around 4.25%, discount rate of 8.5%, and that gives us a dividend discount model price per share of $65.25. The third company that just increased their dividend payouts is Merck, and they increased their dividend payouts by 5.5%, all the way up to 77 cents per share, giving them a forward yield of 3.06%. We can see over the past year, they're down around 3.6%, and year to date, down around 4.58%, with a 52-week low of around $96 a share and a 52-week high of around $119 per share. If we look at this dividend history, we'll go ahead and scroll down. We can see 12 consecutive years of dividend growth. That's a great sign. And if we look 10 years ago, they were paying out around 41 cents per share quarterly, and jump forward to now, around 77 cents per share quarterly. If we look at these dividend growth rates, we can see it's been decent over the past 2 years. 3 years, around 8%, 5-year dividend growth rate around 10%, and the 10-year around 6%. So that's decent dividend growth over this time. Now for dividend safety, what I actually want to do is I want to jump over to the financial statements and go to the statement of cash flow. And I want to see what their free cash flow per share is for the trailing 12 months. And we can see right here, we have our free cash flow per share. Again, dividends are paid out of free cash flow. Come over here and we can see it is $5.19. Again, we'll go ahead and make note of this on my spreadsheet real quick. I'll show you why, 5.19, but go back over to Seeking Alpha. If we scroll up, we can now see the forward-looking dividend payment sitting at $3.08. We'll come over here and plug this in, 3.08, and I'll hit enter. Now, all we need to do is a quick formula. I'll do equals. We'll take the dividend payment, divide it by the free cash flow payment. We can see right here, 59.34%, around 60% of their free cash flow is being used to pay out dividends. Now, that's a little higher than I typically like to see it, but for a company like Merck, it's probably not really a bad thing. But let's go ahead and come up here and plug in that stock ticker MRK and hit enter. And again, we can see payout ratio as a result of earnings sitting around 49%, so a little bit lower. Analysts have a target price of around $125 per share and a very, very low beta, so you should see very little volatility with this company. If we jump into our dividend discount model, I'll go ahead and zoom in, and you can see, again, I plugged in the data. We can see for the most part, those dividend growth rates ranging from around 5 to 6%. Moving forward, I'm going with that 5% dividend growth rate, discount rate of 8.5%, and that gives us a dividend discount model price per share of $92.40. The last company we're looking at that just increased its dividend payouts is actually the first Canadian company I think we've looked at on the channel, and that is TD Bank. They just increased their dividend by 6.3%, making it a $1.02 dividend in CAD. Keep that in mind, we're not talking about USD here, but if we jump over to the Seeking Alpha tab, we can see this gives them a trailing 12 months yield of 4.68%. And if we look at the past year, they're down around 9.83%, and year to date, down around 5.6%. Now, something that's interesting about this company, and we definitely need to understand this, and if we look at the dividend history tab, we can see these payouts actually fluctuate a little bit over time. So while it's definitely trending upward over this time period, again, you can see we have a little bit of a higher dividend payment followed by some lower dividend payments, but for the most part, it is clearly trending upwards, which is important. Now, if we jump over to the dividend safety tab, we can see here payout ratio forward-looking non-GAAP sitting at around 51.55%. And again, this is a bank stock, so we don't typically look at the cash flow payout ratios for bank stocks. I typically look at the earnings payout ratio. Now, if we jump over and look at the dividend growth rates over this time period, we can see the 3 and the 5 year and pretty much the 10 year as well, sitting in that 6 to 7% dividend growth range. So pretty decent dividend growth for a dividend stock that is a bank stock and also has a nice starting dividend yield. Now, if we jump over to the dividend discount model on my spreadsheet, again, it's a little unique since those dividend payments do fluctuate over time, but I'm projecting 4% dividend growth moving forward with an 8.5% discount rate, and this gives us a dividend discount model price per share of $69.52, a little bit above that current trading price. So there you go, those are 4 dividend stocks that just recently increased their dividend payouts. And like always, if you'd like to go download the spreadsheet and join a community of dividend investors, then you can head over to my Patreon page at the link in the description. You can also get a huge discount on Seeking Alpha at my link in the description as well. So with all of that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.